All right, what is up? Let's give some folks some time to jump in. We will start our market analysis for the new year. Lots of news this weekend with Venezuela, now possible conflict with Russia and China. So a lot of heavy economic, impactful events, specific to a range of different instruments, from obviously oil to possibly metals, and even an impact on the broader indexes if China decides to put sanctions and or tariffs. We don't know what's going to happen, so it's going to be interesting. But we'll take a look and see just in the short term what we're looking at, and then we can go from there. So we'll let give some folks some time to jump in, and we will go from there. So we'll give it just a minute, and then feel free to ask any questions in the comments, or if you're in the Corvus Discord, feel free to ask there. I'll answer them for everybody. So YouTube, and as usual, let me know if you can't hear me. Let me see this. A couple people here. We'll wait for a couple more. Let me know you're here in the chat. Say what's up, so I know you're here. All right, we got a few people in here now. Let's go. Cool. I don't care if there's one person watching or 1,000, as long as somebody's in here and taking something away. I'm extremely grateful. So. Well, let's jump into it. So, first thing I want to do is look at why the market reacted the way it did, based off of the trading week that we just had, and it actually played out pretty well in comparison to our analysis on Wednesday as we went into Friday's trading day, and I actually I saved this. So this was our analysis that we did live on stream on Wednesday, where we basically marked out our fib levels. We looked at extension levels on the current micro trend, which was on the shorter time frame, and then we looked at volume profile. Look at some volume profile cliffs where we can have some possible support from a volume profile perspective, and then we also looked for some areas here of where we had supply and demand zones based off of price displacement, and everything lined up with this area right here. So we marked this area and we put a square right here because this was our area of interest going into Friday's trading day, and the reason being is because we had this move here, this smaller move here, which was a retracement, and then our extension at our 1.618 extension point, because we had already broken the 100% extension. So that lined up here. We also had a larger retracement on the higher time frame, which started down here up to this move up here, which also had a 0.618 retracement from the larger move right in this area as well. And then we also had a dominant trend line on the weekly and the daily and the hourly, that lined up perfectly with this level. And then also over here we have this volume profile right at the end of the volume profile cliff right here, which is always a good support level. It's on the bottom of the range, which is where we want to take our trades as well. So this was our point of interest. We highlighted it. We called it out in chat. Sorry, my phone fell. We let people know like this is what we want to look for. And if you can see, it played out pretty well to that exact level. So this is our 4-hour trend / our monthly trend. This was the area that we highlighted, and we had a perfect bounce right at that area. So if we would have just waited for that trade right there, right around that 260 to 300 level, we would have had a nice 150 to 200 points, and that's the only trade you would have needed to take in the day. You could have just waited for this to play out, come to our key level, and then make a bounce up. So really nice work for everybody there that was patient and waited for that. Another thing that we saw happening for the reversal here, which is extremely important. So as it comes into a key level, and we talk about this quite often, is you want to look for divergence and signs of some sort of reversal. It doesn't need to be a full reversal where all of a sudden we go back up and fill the gap on this pattern, but an area where we're going to get a decent sized pullback / reversion back into some of our other key levels from a resistance perspective. So if you take a look at the 1 minute time frame as we were moving into this level, so this is our level here. We started to see some heavy divergence here as we bounced into it. So we came right into it here. We had RSI diverging. Let me get volume up here real quick because I like to look at volume as well as an indicator. And this is what everybody should be doing. Right now, if you're sitting in chat just trying to read forums and talk to people and validate what your prediction is at market open, you're wasting your time. It doesn't matter what you think you can predict. And you might be right, you might be wrong. It doesn't matter. It's a coin flip. It's 100% a coin flip. We're either going up or down. You have a 50% chance of being right. That doesn't benefit you. And just because you're right today doesn't mean you're going to be right tomorrow. What benefits you is going back and figuring out why we held certain levels, why we bounced at certain levels. What does the market look like now? Do we see weakness moving into today's trading day? So back to looking at this, as you can see, we moved down. We came right into our level that we had mapped out, a couple days before. And RSI started diverging, which tells us that we are now in a key area where we may see a reversal. So two things happened here. And you always want to look for this when you're trading dominant levels. So first, we created a trend here. This is a reversal pattern trend, right? It's a downtrend. But it's in a pattern that is actually a bullish reversal pattern, which is you go down, then you have a descending triangle or a descending a rectangular channel, and then we break to the upside outside of this channel. So we see this first trend line here. Secondary, we saw some heavy divergence here from swing 1 that we had, which was the first move down of the day, into swing 2. And hold on, somebody's asking where the stream is. HTTPS in my profile, YouTube. Okay, so I'm going to start that over real quick. I want to get my train of thought. I'm going to try to record these clips too, and then I can post them, and that way if you need to come back to them, you can. So you see this move down. You see how RSI reacted right here, right? We had a peak in RSI, which was great. We had a pullback, and then we had another break below. But we had a 465 to 1. We had a 160-point move, but RSI became stronger. It did not become weaker than the previous low. So what that tells us is that this is a possible area that we want to look for a reversion. And let me show you guys here on the bottom. So you see this peak here. And then we have this peak here. And then we have this peak here. And then we have this peak right here. And all of these are telling us that we are not getting weaker as we're going down. We're actually getting stronger. There's more buying happening on these moves down. So that's an indication of two things. First, we're in a key level. And while we're in a key level, we're seeing price action not line up with strength. And second piece is we have a trend right here that we're looking and waiting for a break of trend for us to get our reversion right here. And on the downside here, for those of you who aren't familiar with divergence, if you take a look at these areas, let me bring this up so you can kind of see it right next to each other. So heavy peak here, another peak, but RSI is getting stronger, and then another final peak, and then RSI did not get weaker than the previous low right here. And you can see this perfectly, this divergence here, and then we had our breakout. Right, breakout to the upside, which was for 268 all the way up to almost 200 points. So two ways to have traded this in that day. First, you could have waited for the first third divergence. So third divergence means 3 peaks. We always trade off the third peak, and it can be a low peak or a high peak. First peak, second peak, third peak. We could have traded this up to this, obviously taken profits, watched it, and then seen this downtrend, take some money out of the market. Or we could have waited for this trend to break once created, and then trade the break of trend with a stop just below it. So a couple ways you could have played this. Where people get scared is when we see lows break. Like for example here, we saw this low break right here, and then the reversal happened right here, liquidity sweep, for example. I take my trades down here. I like to trade the lows versus trading the breakout because I like to trade into the trend line within the pattern. But if you're not comfortable yet taking these types of trades here, then you can absolutely wait for the trend to break and then go from there. There was another way to trade this as well too, which was identifying 1 to 2 swings on each side and then trading the pattern. So we had 2 swings here. All of a sudden now we've created this downtrend, which we already discussed. And now we have this area right here, which has created this pennant. And while this is in play, you could basically just trade off of the support and resistance of this channel until we get a break in direction, and then wait to see what happens with price action. So there's a lot of different ways to pull money out of the market. I think what I've noticed in a lot of these chats is most people are looking for the full reversion. Like, is this the bottom? Should we go long? Let me hold for the next 2 hours because I want to get as much as possible out of this. We never know if we're going to get a full turnaround. Like sometimes it doesn't happen. And so the question you have to ask yourself is am I sitting here all day long just to wait for my full reversal, or am I going to take some money out of the market because that's why I'm here? I've got to make sure that if I'm sitting here for 8 hours, I got to take some money out. So scalping is where that's important, right? Luckily for us, if we would have gotten to a trade down here and got it up, you got 200 points. That's a big move. But people want to keep holding, or they want to wait. No, just get in, get out. Get 20, 30, 40 points, leave a runner, see how it reacts, and then you can get out. So if you have any questions from that perspective, please let me know. So this was that trading day that we had there. Everything lined up perfectly. And now, right now, you can see we have this kind of trend being created that we're bouncing off of. So I've talked about this before, and a lot of people see these things, but they don't use it to their advantage. When you see price holding what may seem like an invisible trend line right here, you see how kind of price is holding this invisible trend line. Draw it. Draw it every single time. Because you never know what it's going to hold, right? Are we going to move back up here, retest this again, right at this level right here where we have VWAP and then come back down? We're not sure, but always draw whenever you see these invisible slanted areas that it's just for some reason price is respecting either an upward or a downward, like right here, for example. It's important to draw those areas. Those are the areas that I draw because I know that price is going to react. If I've had 6 or 7 bars react in a consolidating area like this, that means there's some sort of trend that's in play. So if I would have drawn this and we broke below, look how many times we've held on this now. Held on the first touch, held on the second touch, all because of this little micro area that showed us this slanted invisible trend that we had no idea that was there. So extremely important. So now let's analyze what we think is going to happen during the day today. Let's take a look at the long term. Again, when we do our analysis, we want to start with the highest time frame possible, right? In this instance, we can go to a week. You don't really have to go to the monthly, but in the weekly time frame, we've got this trend that's in play on this pattern that we just bounced right off of. So that's a nice area right there. Then on the downside, we have this. So based on what it looks like, we are basically within this pennant pattern, just bouncing back and forth between support and resistance. And when we see these types of things, we're going to get large price swings in a direction because it's filling the gaps in between this pennant. And people all of a sudden, they'll see a move from a resistance to a support within a pattern, and they're like, oh, we're bearish. That's not the case. If we're trading within a channel, a pattern, a range, and we're getting heavy price swings in a direction, it means nothing. It's basically just accumulation and or distribution within that channel or pattern. That's it. That's all it is. It's when we break the pattern where then we can start taking a bias. So for example, in this area right here, the thought process would be, okay, well, we're bouncing off of support. We're probably going to fill this gap to the upside, 100%. That's a very good thesis to have. Or it could be, we're going to break this, we're going to come back, we're going to break to the downside, and we're going to have a pullback down to this 24,814 level where we held for support last time. That's a great thesis as well too. So you want to make sure that you have both your bull and bear thesis. Make sure that it's not dependent on a specific trading day if it's within a range, right? For example, yesterday we had a big move down. That doesn't necessarily mean that we're going to be bearish. Doesn't mean that we're going to be bullish, but have both theses and be ready for both to play out. If you only have one thesis in the market for the day, you are going to be looking for whatever you can from an ego perspective to try to validate that thesis. You want to make sure that you're not doing that. Do not convince yourself that one direction is going to happen. Know that there's both sides, and jot them down and write them down and be ready to play either way. We got a good amount of folks in here, so feel free again if you want to ask questions. So let's go to the 1 hour time frame now. Let's go to the 1 hour. So now we want to look at how price reacted at certain levels. Do we see any patterns or channels that are being formed here on this pullback? Currently right now we have this 2 swings on the pullback. So this is indicative of a possible bear flag that we may play. So this is a bear thesis right now. We have a lot of selling going into closing. We didn't have a lot of buying, right? We had a reversion into this key level right here. And a lot of sell strength continuing to push us down here, with sell volume actually increasing higher than what we had on the 1 hour buy bar. So a lot of things right now are telling me that we are going to go down. I don't know what that means. I don't know if the news that we've just had, if there's going to be impact. I don't know if the market knew ahead of time, which sometimes it does, that we were going to go in and these things were going to happen and money needed to be taken out of the market and moved into other assets. So, but this is the first thing that I see. It's very obvious right here on the 1 hour that we are still trading in a bearish continuation pattern. That's the bear thesis here. So I would be right now looking for, if we break out of this to the upside, that would be where I invalidates it, and we'd be looking for a long position. If we gap down and open, if we open and we gap down, I do think there's going to be a gap in a direction. Anytime there's some sort of news for, takeovers and war and sanctions, etc., we always have some sort of gap. If we gap down, there's a very high likelihood that we could just break this low and continue down. So if that happens, then the question becomes, where are our next levels where we want to look at for support? Right? I'm not saying this is going to happen. I just want to make sure that I'm ready if it happens. You must be ready no matter what happens in either direction, to be prepared to take a trade and wait for the trade to come to you. That is the most important piece. You cannot have one bias. You must have two biases in both directions and know with whatever happens, you're ready to take the trade. That's the most important piece. So we're going to focus right now on what happens if we break this low, and then we'll focus on what happens if we break this high. That way we're ready to take the place. So if we break down here, first thing we want to do is we want to look at what our extension levels are here from a fib perspective. So bar high, bar low, swing high. This is in play as long as we don't break this high, which is the 454 high. If we break the 454 high and then reverse, then we'll have to adjust our extension levels because we'll have a candle that's a little bit higher on the pullback. Could be up here, right around 492. It's possible, right where VWAP is. So if we extend down from where we're at now, if we gap down and we extend down, we'd be looking at a couple of these levels here. We have 24,949. We have 25,058. We have 25,144. And they're all very possible. I think we're going to have a bigger swing this week than 100 and 200 points. I do feel like we're going to have quite a few 400, 500 point days. So looking at 949 and 534 does not seem that unrealistic. Now what I want to do is, now that I've drawn my first indicator, which is my extension levels, and this is always what I do first, by the way. I always draw my extension levels first. And the reason why I draw my extension levels first is because I want to now try to line up my extension levels with other key areas to validate whether or not there is confluence at certain areas. More market participants equals higher probability of trade success. So this is our first indicator. Now we want to look for 2 or 3 or 4 more indicators that align perfectly. So now let's take a look here. So this area right here at 949 is where we had our low at our reversal. This was where we bounced last time. So I'm going to mark this level right here, key level. Are we going to get here? I'm not sure, but this is important, right? It's a double bottom area. We have our 100% extension from this move down right at this level. It creates an ascending support if we bounce here at 949, which is something that we like. And very possibly could be, you see how we have these trend lines here that are going upwards? Let's draw them. Right here. And so what we could be doing is creating another pattern as well to trade into. So come down here, bounce in this area, bounce up. But I'll remove this for now, because right now we're just hyper-focused on just key levels where we can trade on that line up. So at the 786 level, I don't see much here. Let's look at the 4-hour. I see this area right here where we had this breakout bar. Nothing that really stands out to me as something that I would take. 618. No, let's look at the 1.618. So this is a good area right here. So the 1.618, you can see, lines up really well with a support that we had before our breakaway for this move up. So right here in this area right here, 24,500. This is a really good support level as well too. So as you're looking to the downside, you just want to pinpoint some of these key areas. Also, I want to see, is there any dominant trends on the higher time frame that we haven't retested yet? If you were watching my stream on Friday, in the open, we traded both sides of a trend retest, and they were both successful. We traded the opening resistance retest and the opening support retest. I've shared this multiple times, and I believe that it is valid 100% of the time. That every trend must be retested, and the retest holds the first time it gets retested. But they have to be valid trends. And that's what most people don't realize, is how to draw those trends. But you see right here how we have these two swings on the 4 hour and then a breakthrough bar. This is a breakout bar. Breakout bars happen right as they break trends that are important, trends that are in play. So this area right here, I'm going to draw as a dominant trend. This lines up with our 618 extension area right around 144. So I do like this very possibly for a bounce. Whether or not it's the full reversal, I'm not sure, but a high probability of being able to scalp this area for at least 40 to 100 points, depending on where we go back up to. So this is a nice area here for a retest. If I go to the 1 hour time frame now, okay. Yep. So we have not retested this yet at all, not even on the smaller time frames. So this would be my target right now if we gap down. 141. This becomes the earliest bounce point for us to be able to look to take a trade, or if we're short, to look as a target for a profit taking. I really like this area right here as our retest, lining up with our 618 extension level based off of this move down. Really nice confluence here. And then if we add one more thing, which is volume profile, which is something that I've explained that I like to use to identify where we have our volume cliffs. So our volume cliff is right here. And this area lines up right just below it. So we may have a sweep here, which we notice on volume profile, and then a move back into the heavy volume. But I don't like that it's outside of the peak. I'd like it to be right at the bottom of the peak, right here. Because this usually tends to be where we have the supports of the ranges, right in this area right here. So that one is not as valid, but as I see this trend retest lining up with the 61.8, this one's enough for me to feel confident in at least taking this trade, understanding my risk to reward, knowing where I want to take the trade, and then what invalidates it, obviously, would be if this trend doesn't hold and we break through it, then I know I need to get out of this trade, because that's my thesis in this moment in time right now. Is we're going to look and wait for the retest of this trend right around 144, where we also have the 618 extension. We're going to take the trade. Our risk is set and invalidated below this trade, which is a not holding of this trend line, and then we can get out of the trade. So we understand our bounce level, we understand what invalidates the trade, and we understand what the possible upside target may be based off of how price reacts. And right now, where we have this 3.82, is probably going to be where I would target 264, so about 100 points or so on that trade. And scaling in and out is extremely important as well, too, to make sure you take profits. So any questions on that? Can you check silver? Yeah, I'll check silver too. No problem. So let's take a snapshot of this. Let's make sure we save it in the chat so we have something to refer to. Come on, open up Snipping Tool. Oh no, my Snipping Tool is not opening. Okay, my Snipping Tool is not opening. How do I take a picture of the screen? How to take... Oh, what just happened? Oops, something just dropped. I think I need to restart my PC. Stay on here, I'll be right back. I'm going to restart my PC real quick.